Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, President Donald Trump's unrelenting attacks on the Federal Reserve Chairman has further eroded investor confidence in the United States, which has seen the US dollar languish near its lowest level in 3 years. Nick Twidale from ATFX says you can't talk about the Aussie dollar without looking at the greenback, which he says is on its knees at the moment.
Multi-year lows. It's a really interesting dynamic that we've got in FX markets. I think I tried to look when I last came on, and I think we were talking about the Aussie getting smashed because of tariffs. And I wrote a piece the other day, and it's like the Aussie's risen 7% back because of tariffs.
Yeah.
So at the moment, you can't really fight this trend, and you've got to look for levels to sell the dollar until we get a definitive change in what we're getting from President Trump and from the US. And then I think we're going to have to trade things on a jurisdiction by jurisdiction basis. So for the moment, I think you've got to look to buy the Aussie on dips. And if it breaks those highs that we've seen recently, that's the longer term chart. You can just see where it's topped out just under 64 cents. I think 64.08's been the high. If it breaks there, it could step us back up and challenge those longer term resistance up at 68 cents.
Yeah.
Well, the most recent market pullbacks have seen bond yields rise, despite the fact that during times of volatility, there's usually a flight to safety in the bond market. Jonathan Takadina from MPC Markets considers where to seek that safety and sees opportunity in the global cyber security ETF.
What you have to try and think of is that even if the stock markets will be more volatile, there will be just some sectors that have, say, either demographics or just trends that will just fuel it, and BUGG is one. So we all know that we're all going more digital now. Everything's on basically on the internet. Everyone's getting more comfortable purchasing on the internet, sending money across and things like that. And so what that means that this ETF has that underlying trend that should mean that it should outperform the overall indexes over the time. And it's just if you see it, it's pulled back a little bit in this market pullback. But if you have a look at the companies that are under it, most of them are at least 50% in cybersecurity. So what that means is that just as long as more people are using the internet, and that trend will likely continue, these stocks should do well.
Jonathan Takadina pays attention to the Warren Buffett method of investing in searching for value. Here's another ETF he has his eye on.
When underlying fads or trends coming through, he just basically wants to have companies that are just very, very good underlying companies. That's why he likes insurance companies a lot. And so what we have here is just another global X ETF, and it just has high yield, low volatility stocks within there. So we're talking all the blue chips. It's like 50 blue chips spread across all large caps as well, mostly in the US. And you can just see, even though the Nasdaq was highly volatile, this has pulled back a little bit, but it's outperformed in comparison. So I think the pullback in this from top to bottom was something like 7%. But in the meantime, if you have a look, it pays a quarterly dividend as well. So at the bottom of each of those charts there, that circle there, there's a dividend there as well. So the dividend yield isn't as high as what we're used to here in Australia, and that's basically because US they're more focused on growth. But it's one way to play. So rather than just having all your eggs in that sort of S&P basket, you can have it here, still have some of that exposure, but you're exposed to more of the quality stocks within that space.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.